So if you're confused about where to invest your money today, stocks or crypto, then this video is for you because we will discuss which one wins in 2025. And spoiler alert, might not be what you think. So stick around until the end. What's up, everyone? Welcome back to our channel where we discuss everything day trading to keep you profitable. In this video, we'll break down everything you need to know about stocks versus crypto. But before we get into that, tell us in the comments below which one do you think will win. Now, both investments are great ways to build wealth and can form the backbone of any portfolio. However, there are some important differences between them, and knowing them is crucial before deciding where to put your hard-earned cash. Let's start with the basics. Stocks represent ownership in a company. When you buy a stock, you're essentially buying a small piece of that company. Cryptocurrencies, on the other hand, are digital or virtual currencies that use cryptography for security. They're decentralized, meaning they're not controlled by any government or financial institution. The first thing you should consider when choosing between stocks and crypto is your investment goals. What are you hoping to achieve with your investment? Are you looking for long-term growth, short-term gains, or something else? Stocks have historically been a good way to build long-term wealth. For example, over the past 100 years, the S&P 500 has returned an average of around 7% per year. Plus, many companies also pay dividends, which can provide a nice stream of passive income. However, it's important to note that stock prices can be volatile in the short term, so you may not see the returns you were hoping for if you buy and sell within a few months. Crypto, on the other hand, has the potential for high returns in a short period of time. Many cryptocurrencies have seen price appreciation of thousands of percentage points in just a few months. This potential for big gains is why crypto has become so popular with investors in recent years. However, it's also worth noting that crypto prices are even more volatile than stocks, and you could lose a significant portion of your investment in a matter of days. Next, you should consider your risk tolerance. How much risk are you comfortable taking on? Stocks are generally considered to be less risky than crypto. As mentioned earlier, the S&P 500 has returned an average of around 7% per year over the past 100 years. This doesn't mean that the market will always go up, but it does suggest that the market is relatively stable in the long run. Crypto, on the other hand, is a much riskier investment. The price of Bitcoin, for example, has seen massive swings from around $100 in 2013 to nearly $70,000 in 2021. It's possible that crypto prices will continue to rise, but it's also possible that they will fall just as quickly. If you're not comfortable with the potential for big losses, then crypto may not be right for you. Another important consideration is diversification. When you invest in stocks, you're typically investing in a particular company. If that company does well, your investment will go up. But if the company struggles, your investment will go down. This is why it's important to diversify your stock holdings. That way, if one of your investments loses value, it won't impact your portfolio as a whole. Diversification is also possible with crypto, but it's a little more complicated. Since there are so many different cryptocurrencies available, you can spread your money around to reduce your risk. However, it's important to do your research and choose wisely. Not all cryptocurrencies are created equal, and some may be more volatile than others. So how exactly do you pick a stock? There are many different ways to approach stock picking, but at the end of the day, you want to find a company that you believe in and that you think has a bright future. This can be a difficult task, but there are some things to look out for. First, you want to look for a company with a strong track record of profitability. You also want to look for a company that is constantly innovating and expanding its product offerings. Finally, you want to look for a company with a solid balance sheet and a history of paying dividends. When it comes to crypto, the key is to do your research and invest in a cryptocurrency that you believe in. Just like with stocks, you want to look for a cryptocurrency that has a strong track record and a bright future. This can be difficult since the crypto market is still relatively new, and there are so many different coins to choose from. However, if you do your research, you can find a coin that you feel confident investing in. Now let's talk about fees. When you buy stocks, you'll typically pay a small fee to a broker. This fee is usually a percentage of the trade and can vary depending on the broker you use. Crypto transactions, on the other hand, typically don't involve a broker and instead are conducted directly between two parties. This means that you'll have to pay a transaction fee, but the fee is typically much lower than what you would pay to buy stocks. In addition, many crypto exchanges offer the ability to buy crypto on margin, which can allow you to purchase more crypto for a lower price. This is something to keep in mind when comparing the cost of buying stocks versus crypto. Finally, you need to consider the tax implications of your investment. When you buy stocks, you'll have to pay capital gains tax on any profits you make. The rate of this tax will depend on your income and how long you held the stock. Crypto is treated similarly for tax purposes, and you need to pay capital gains tax on any profits you make. However, the tax treatment of crypto is still being worked out by governments around the world, and it's possible that the rules will change in the future. If you're concerned about taxes, you may want to speak to a tax advisor before investing in crypto. So which one should you choose? As we discussed, both stocks and crypto can be great investments. Ultimately, the decision of which one to choose is up to you, and there is no right answer. If you're looking for a long-term investment with the potential for steady growth, stocks may be a better option. However, if you're looking for a shorter-term investment with the potential for higher returns, crypto may be a better choice. It's important to note that stocks and crypto are not mutually exclusive, and you could invest in both. This could be a good strategy, since it would allow you to take advantage of the potential benefits of both types of investments. So what do you think? Will stocks or crypto win in 2025? Let us know in the comments below. We would love to hear your thoughts. And hey, if you're still watching this video, we know that you're as curious as we are. So here's a bonus. Our prediction. Both stocks and crypto will continue to grow in popularity in the coming years. As the global economy continues to recover from the pandemic, people will be looking for new ways to grow their wealth, and both stocks and crypto will offer attractive opportunities. However, we believe that crypto will be the winner in 2025. The technology behind crypto is simply too disruptive to ignore, and we believe that it will eventually replace traditional financial systems. Plus, the potential for growth in the crypto market is just too great to pass up. We hope that you enjoyed this video and that it helped you understand the difference between stocks and crypto. If you're interested in learning more about either one, we encourage you to do your own research. With a little bit of knowledge and experience, you can make informed decisions about where to invest your money. So don't wait. Start investing today and watch your wealth grow. If you enjoyed this video, make sure to hit the like button and subscribe to our channel for more videos like this. Thank you for watching.